While everyone else was screaming, selling, and losing sleep, one man was quietly smiling. Warren Buffett. The Oracle of Omaha. The man who has lived through 8 major market crashes and came out richer every single time. Today, we're going to break down exactly how Buffett reacted to every major crash since 1987, what he said, what he did, and most importantly, what you can steal from his playbook. Because here's the thing, his strategy wasn't luck. It was a system. And once you see the pattern, you can never unsee it. Let's go. Before we dive in, hit that like button if you believe in long-term investing. It genuinely helps this channel reach more people. Okay. We're going from 1987 all the way to the most recent market turbulence. 6 crashes. 1 man. 1 philosophy. Let's see how it played out. October 19, 1987. The Dow Jones dropped 22.6% in a single day. The largest single-day percentage drop in history. People genuinely thought the economy was over. So what did Warren Buffett do? Nothing. He didn't sell. He didn't panic. In fact, Berkshire Hathaway's portfolio barely flinched in terms of his behavior. But here's what's powerful. Buffett later said that Black Monday taught him one of his most important lessons. The stock market is there to serve you, not to instruct you. He saw the crash not as a warning sign, but as the market being irrational. And irrational markets? Those are Buffett's favorite kind. He began quietly accumulating positions in companies he already believed in. Coca-Cola was right around the corner, and spoiler alert, he bought it during the chaos of the late 80s for what turned out to be pennies on the dollar. Key takeaway: when the market panics, Buffett goes shopping. By 1990, the US was dealing with a banking crisis and a Gulf War. Markets dropped nearly 20%. Unemployment was rising. Fear was everywhere. This is when Buffett made one of the greatest moves of his career. He aggressively loaded up on Coca-Cola stock, a company he'd been buying since 1988, and by the time the dust settled, Berkshire held over $1 billion worth of Coke at a cost basis that would make your jaw drop. He also invested in Wells Fargo during this period, when banking stocks were being absolutely hammered. Everyone thought banks were finished. Buffett thought banks were on sale. His famous line from this era: "Be fearful when others are greedy, and greedy when others are fearful." This wasn't just a quote. He was living it in real time. Key takeaway: Buffett buys great businesses when bad news makes them cheap. Now this one is fascinating, because Buffett was actually criticized going into this crash. In the late 1990s, everyone was making money on tech stocks. Amazon, Cisco, Pets.com. The Nasdaq went up 400% in 5 years. And Buffett? He barely participated. People called him old-fashioned. An analyst on CNBC said he'd lost his touch. Berkshire underperformed the market for 3 straight years. Then the bubble burst. The Nasdaq fell 78% from peak to trough. Trillions of dollars evaporated. And Buffett? He hadn't lost a dime on tech stocks, because he never bought them. He famously said he didn't invest in what he didn't understand. But he didn't just dodge the bullet, he went shopping again. He began buying into mundane, boring businesses, companies with real earnings, real cash flow. While Silicon Valley burned, Buffett was buying furniture companies, insurance firms, and energy assets. Key takeaway: Buffett's discipline in not buying protects him as much as what he does buy. This is the big one. The one that changed everything. September 2008. Lehman Brothers collapses. The global financial system is on the brink. The S&P 500 would eventually fall 57% from peak to trough. This was the worst crash since the Great Depression. And Buffett? He wrote an op-ed in the New York Times titled, "Buy American. I am." He didn't just say it. He did it. In the midst of the worst financial panic in 80 years, Buffett deployed billions of dollars. He made a $5 billion deal with Goldman Sachs, getting preferred shares with a 10% dividend and warrants to buy Goldman stock at a fixed price. He invested $3 billion in General Electric. He doubled down on positions across the board. When asked if he was scared, Buffett said something remarkable. "I don't know where the market will be in a month or a year. But I know it will be higher in 10 years. And he was right. Those Goldman and GE deals alone made Berkshire billions in profit. He also famously said, "Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble." 2008 was his bucket moment. Key takeaway: the bigger the crash, the bigger Buffett's conviction and his checkbook. March 2020. The fastest market crash in history. The S&P fell 34% in 33 days. Entire industries were shutting down overnight. Now, here's where it gets interesting. Because Buffett's 2020 reaction was different. He didn't buy aggressively this time. In fact, he sold his entire position in airline stocks, Delta, United, American, Southwest, taking a significant loss, and openly admitting, "I was wrong about the airline business." This shocked people. Was Buffett losing his edge? But look closer. He wasn't panicking. He was adjusting to new information. Airlines faced an existential threat that was genuinely unknowable, and Buffett knew when to admit a mistake and move on. What he did do was quietly prepare. Berkshire was sitting on $137 billion in cash. He was waiting for the right pitch. And in mid-2020, that pitch came. He made a massive bet on Chevron and other energy companies at crash-level prices, and famously invested $6 billion in Japan's 5 largest trading companies, a move that has since returned extraordinary profits. Key takeaway: Buffett doesn't have an ego. He cuts losses, adapts, and stays patient for the right pitch. 2022 saw the S&P fall nearly 25% as the Fed aggressively raised interest rates to fight inflation. Growth stocks and tech were crushed. Even the safe bonds lost value. Buffett's move? Aggressive buying. He went on a historic spending spree. Berkshire bought $51 billion in stocks in just the first half of 2022. He loaded up on Occidental Petroleum, eventually owning over 25% of the company. He bought energy, he bought financials, he bought more Berkshire stock itself through buybacks. In one quarter, while Wall Street was melting down, Buffett was deploying more capital than he had in years. And once again, those who followed his lead were rewarded handsomely as markets recovered. Key takeaway: Buffett treats high inflation and rising rates as an opportunity to buy assets at discounts, not a reason to hide. Now you've seen it across 6 crashes. So what's the actual pattern? Here it is, the Buffett crash playbook. 1. Stay liquid. Always keep cash on hand. Cash is optionality. Cash is ammunition. 2. Don't predict. Prepare. He never claims to know when a crash will happen. He's always ready for one. 3. Focus on business quality, not stock price. He asks, "Is this a great business?" Not, "Is this a great time to buy?" 4. Ignore the noise. TV, headlines, analysts. Buffett famously doesn't watch CNBC for market guidance. 5. Have conviction. Buying during a panic requires genuine belief in your analysis. Buffett's homework is done before the crash, not during. 6. Think in decades. Every single crash felt like the end of the world. And every single one eventually recovered. Here's the thing about Warren Buffett: he's not some superhuman. He doesn't have insider information. He doesn't have a magic formula. What he has is temperament. The ability to stay calm when everyone else is losing their minds. To think long-term when everyone is screaming about next week. Every crash since 1987 felt catastrophic in the moment. And every single time, the market eventually recovered and went higher. As Buffett himself put it, in the 20th century, the United States endured 2 world wars, the Great Depression, a dozen recessions, and the Dow still went from 66 to 11,497. The question isn't if the next crash is coming. It's whether you'll be ready to act like Buffett when it does. If this video gave you value, subscribe. We break down the strategies of the world's greatest investors every single week. See you in the next one.